by the leverage in the crypto markets, right? I mean, in the stock market, you can play 2-to-1. 2-to-1 leverage is what an overnight investor can hold in a regular account. In crypto, it can be up to 100. It can be higher than that. And that creates these pockets where when flushes occur, you get these massive moves to the downside. And I would just like to say this is that if you want the mom and pops that are not in, the people that people hope start to buy into, the pension funds to buy into Bitcoin, you can't have intraday moves of 10 to 15%. They do not want to be involved in that. So this type of move is not healthy for crypto.
Well, that's debatable, whether that maybe pulls in more people that want that great return that you can make on, but we'll get into that. Let's focus on what we're seeing from the technicals right now, because in past cycles, and granted there haven't been that many, but in past cycles, Bitcoin typically doubles after hitting a new high. That's what we've seen. Anthony Pompeo was making similar comments that that's what we should be expecting in this cycle. What do the charts tell us? Where do you see the next line of resistance here?
Yeah, so first off, we have to be aware that the double top is the double top. So on a technical basis, until we really clear that, and a pierce intraday doesn't matter so much. So resistance, once we broke above 49, resistance becomes technical support. So on the way down now, 49 to 50 becomes huge support. Now, I will say this. If the stock market begins to crumble, let's say all of a sudden it becomes a risk-off environment, then we most likely will go down to that 30 to 32,000 level.
Right. Okay. But for now, you're ready to call a strong bottom at 49.50 or a strong level
as long as the stock market stays strong, which again is all tied to liquidity from our good old-fashioned government printing money, and I know we'll get into that, in the Federal Reserve, then to be honest, pullbacks are buying opportunities in Bitcoin, and 49 to 50 is a major support.
How likely is it that you think we get a pullback to that now, especially considering we've got the halving coming up in April?
Yeah.
Which is traditionally, bullish because we have fewer rewards for miners, reduced supply, and we're going to have all this increase in demand with the spot Bitcoin ETFs. So can we expect a pullback? What are you seeing right now then? Yeah,
so I think honestly, if we see the NASDAQ and the S&P continue to make new all-time highs, the pullbacks will be unbelievably small. Like today, honestly, the low, if we see another new all-time
high, it's going to happen, but the consequences for that don't seem to materialize. It seems
not yet, right? I mean,
but so let's talk a little bit more short term, because I get that big picture. That is a huge concern. But more short term, I mean, is it likely that you are anticipating a 50% pullback in the S&P 500?
I do think, yeah, absolutely. In fact, think about this. The NASDAQ is up just from the October 2022 lows. What is it up, 67%? So I mean, just a 50% correction takes us back to that level about. I mean, it's not that outlandish to think that and again, keep in mind, we're slowly losing. Like if you look at the Magnificent Seven, one by one, they're dropping off the cliff. Apple's dropped off the cliff and it's had a major breakdown. We've seen even Microsoft now today was down significantly just after making new all-time highs. Tesla's getting crushed over the last 12 months. And so slowly these stocks are starting to collapse. Then we look at all the sectors. Out of the 11 sectors of the S&P 500, there's only one sector that has made a new all-time high. So the pieces of the puzzle of something bigger are there. It's being masked. They're missing out. And these analysts are like, oh my gosh, if I don't upgrade this market and my target is too bearish, I'm going to get fired from my job for not being on top of this move. Or you could say the big banks, the big institutions are looking for exit liquidity, right? Exit liquidity meaning that they have these massive positions that they need to unload. Now, again, I don't want to be accusing anyone of anything here. I'm just saying that there's two ways to look at this. One is it's either they're human or it's exit liquidity, because it's way too common that these massive upgrades to stocks come in at massive tops, and same thing to the stock market, right? And again, just look at this chart right here. This is the U6 employment thing. One of the things I found in this chart is that U6 starts upticking 12 months before a recession. If you look back here, 12 months, we had a recession. 12 months, we had a recession. And if you look at the latest here, we have an uptick of U6 for the last almost 12 months. It's about 9 months now. Now, interestingly enough, if you overlay unemployment on this, what we see is unemployment is still low all of these times until we actually get to the recession.
What is the U6 chalk specifically?
So just to explain, and that's a great question, I actually believe that you need an alternative to the US currency or to just fiat currencies. This is exactly where we want it to go.
And that potentially is also the reason that we see both gold and Bitcoin reaching new all-time highs as an anti-fiat play. Absolutely. As a reaction to 34 trillion
I totally think that it is partially tied to the fact that we just hear these crazy numbers like, oh, the U.S. government just added another $100 billion in debt in the last few days or whatever it is. There's no doubt that people are continuing to be concerned. In fact, it's one of the top concerns going into this election cycle about the U.S. debt. My only issue is, and this is what I've said to people, is like, people have to understand you can't have your cake and eat it too. We can get the U.S. debt under control. The government can stop spending ridiculous amounts of money. I think we should have a balanced budget. That should be written in in the Constitution, that you always have to have a balanced budget, but it will come with austerity, which is going to be painful for people. It's going to mean higher taxes. It's going to mean, there's a lot of things that it's going to mean, and people just have to be accepting of that. It's like, you can't have
that we go back to 49 and potentially even 15. Then
again, please let's keep in mind, because I'll get added on Twitter and every other social. The key is, again, and I say this super clear because people always take the one headline but not the other, is that the only way we're ever going back to 15,000 is if we get a massive correction of over 15% in the stock market.
50%. 50 equals 1.5 in Bitcoin.
That's right.
Okay. All right, and 49 in May, and you think 70 is about as high as we're going to get for 2024?
I do.
Okay. Well, many would disagree with you,
absolutely,
Gareth, but that's
what makes a market.
That is exactly what makes a market and keeps things interesting and exciting. And again, I always like to point out that for those calling you a perma bear, you're a swing trader, you're a day trader. You make money on the daily moves.
Yeah.
But I know that big picture, you're still very bullish on Bitcoin.
Yeah, there's no doubt. I mean, again, since 2013, when I really started to get interested in Bitcoin, and if only I had loaded the boat back then, right? There's always the what ifs. But, as those commodities start to take off, like Brazil is one of my favorite charts out there. In fact, let me bring this chart up. There's this incredible chart on the EWZ, right? And again, you can even extend the lines further back, but this is just the weekly chart. But look at this wedge pattern, and then look at recently what's happened. We've broken out on this, and Brazil has not, at least this ETF has not made a new high since 2008. And remember, Japan took 30 years. And so there's so many foreign markets that have been underinvested in. And that's where I think the money's going to go. And Brazil has a huge amount of resources here. I think that's the future right now, especially as fiat currencies continue to be debased.
Why Brazil as your emerging market of choice?
Well, I think there's a lot of them, right? I mean, there's a lot. But what I did is I looked up online. I did a lot of research on what countries have the most rare earths, the most gold, and other major resources. And Brazil was right at the top of most of those lists for those type of resources. Oil itself, not as important to me, as I do think the U.S. has become so dominant in we start to see some of these bigger players start to crack after they've made such massive moves.
Okay, let's bring it back to gold then.
Okay, back to gold.
Again, you've been calling for gold to hit a new all-time high. We did see it reaching a new record of $2,141 per troy ounce based on the London Stock Exchange. It's interesting, though, because at the same time, we're hearing about outflows from gold ETFs into Bitcoin. I mean, that's been a huge headline, right? That gold ETFs are hemorrhaging money and it's going into Bitcoin. How did we manage to get an all-time high in gold when we have this ETF outflow? Well,
and I think that's the crux of why it's so bullish, is because you have these ETF outflows from retail moving into Bitcoin. Bitcoin's the sexy thing right now. I mean, it just is. It's where everyone wants to be. You talk to anyone on the street, they're talking about Bitcoin. I've had friends that have people call them up about Bitcoin that have never invested in their life. Oh, I got to get in on Bitcoin. To me, those are signs of tops, not bottoms. And so again, and I'm not talking long-term top, we're just